United Wholesale Mortgage has had earnings this week, and the share price has indeed fallen a decent amount after an initial rally on the back of this earnings, which, surprisingly enough, seemed like it was mostly positive for the business and the industry as a whole, really. But looks can be deceiving, and the immediate future maybe doesn't look as good as what these earnings have shown. They make their money basically on the origination of mortgages for either new purchases of homes or refinancing of homes. Now, it's no secret that interest rates are up compared to a couple years ago. And because of that, the refinance portion is proportionally a much smaller piece of what they're doing today than what they used to do. This bears out in the highlights of the latest earnings release. All right, we have total originations of $31.8 billion in this quarter, compared to 29.9 of the comparable quarter last year. So that number is up, okay, which is generally a good thing. It's one of their key metrics that they look at to see how they're doing as a business overall. However, to my previous point, purchase originations made up 28 billion of that 31.8. So the vast majority of their originations are coming from new purchases, not from refinances, which, of course, most currently outstanding mortgages people have, because interest rates have been going up, are actually at lower interest rates than what they could get today on a refinance. Generally speaking, when you're refinancing, in most cases you're doing it to save money on your monthly payment, because you're locking in a lower interest rate than the one you originally got when you purchased. Now, there will still be some refinances happening because investors will often go in, buy a property, fix it up, increase the appraisal value, and then do a cash out refinance. They basically get a new mortgage for a higher amount on the property after they've raised its value due to fixing it up, and then use that money to finance other deals. That happens all the time in the real estate investing world, and I would guess that's probably where a good amount of their refinance originations are coming from. But it's only a very small fraction of people who are able to actually invest in real estate in that way, and so refinance numbers are only a tiny fraction for now. A couple years ago, refinances were a much bigger piece of the pie. So on that, they gained $228.8 million of net income, which is, again, it's up from the comparable quarter last year, and way up from Q1 of this year. Now, what this gave us is an adjusted diluted earnings per share of 11 cents, which does cover the 10-cent per share dividend. Now, honestly, I'm a little curious about where their headspace really is on the dividend. As you can see, they've had some results like comparable quarter last year. They basically matched the dividend with their earnings per share. Q1 of this year, they had technically a net loss here, which you're definitely not going to pay a dividend with negative money. Pay us a negative dividend, and this quarter barely beating it, barely covering it at 11 cents for a 10-cent dividend. However, that being said, they have declared the 10-cent dividend, and it seems like they're wanting to keep the streak alive. So, subsequent to June 2023, for the 11th consecutive quarter, they've declared a cash dividend of 10 cents per share. So, I mean, they seem to be pretty happy to keep that streak alive for the moment. And it's true that analyst projections for their earnings do show a pretty substantial increase expected in 2024 and 2025. However, if you look at the analyst projections for 2024 for 38 cents per share in EPS for the whole year, that's still slightly shy of being able to actually cover the 40 cents over the course of the full year that they would pay out in dividends. So I question slightly the sustainability of the dividend, but in the meanwhile, I am happy to collect it while they continue to, grow their origination numbers. And, in the past few quarters, they've really taken a lot of market share from Rocket. This is the company I would prefer to have over Rocket. Market share has been kind of the thing that they've been going after for basically the entire time they've been public. Their aim has been to eat Rocket's lunch. And this is sort of my somewhat speculative play on the overall American housing / mortgage market. I think that, it's worth having a little piece of that pie, although in my overall investing, this is a relatively small position because, let's face it, the housing market seems like it's at a bit of a teetering on the edge type moment, and we're seeing some different, some cooling down and some outright price drops in a lot of markets. And I think the short to medium term could potentially get ugly if we have like a major downswing in the real estate market in the sometime in the next year or two, which is completely a realistic thing. I mean, 2008 at the time seemed unprecedented, but it proved that things can happen even with the so-called invincible United States housing market. So I would be cautious getting into this stock, but if I've already got shares, I'm not looking necessarily to sell or panic and get out of it. I'm happy to sit here, collect the 10-cent dividend as long as they can pay it, and wait for the housing market to improve and for perhaps interest rates to become more favorable for refinances again in the future, and for UWM to reward me for holding on to their shares when that time comes. That's about all I got for you on this one. Let me know if you have any shares of United Wholesale Mortgage, or if you prefer their competitor Rocket, and why. Hop into the Discord, link in the description. Like and subscribe for more. Take it easy, everyone, and have a fabulous Friday. Gotta get down on Friday.